economist, we continue to make sense of this controversial postponement of the tabling of South Africa's budget. So let's take a broader look at global market reaction. And Chief Economist for Africa and the Middle East at Standard Chartered, Razia Khan, joins me now. Razia, good morning. Thanks as always for your time and your insights. Let's start off then with global market reaction to the postponement.
So it's really important to distinguish the various stages of what happened in markets. Early on the morning of the budget release, we started to get talk seemingly out of nowhere around a potential VAT increase, around some of the mitigants that might be put in place to protect the poor against that increase. This is very unusual. The embargoes ahead of the budget have generally been very strictly observed, and there's very little talk about a tax increase of this nature, almost no expectation of it in the analyst community. This quickly turned the focus of investors to some of what seemed to be coming out of South Africa, the DA in particular, suggesting that they were opposed to any tax increase, investor concerns about whether agreement would be reached in time for the budget to be read. And at the heart of all of this was the concern that maybe the government of national unity would not hold together, that this could certainly disrupt things. And that, more than anything else, was the reason for the sell-off across South African assets. It was that political uncertainty. Does any of this have deeper implications? Later on, we got the clarity that the budget had been postponed. That is unprecedented. It wasn't seen as an especially confidence-boosting measure. But I think markets, for the most part, understood that this was being done to calm some of the criticism that had been received. And the interpretation overall today, much calmer conditions expected, is that the government of national unity is going to deliberate further on the budget proposals. And the hope is that the GNU holds together. Everyone anticipates the budget coming through on March the 12th.
So just to pick out a few themes then from what you've said, Razia, this caught analysts by surprise, the breaching of that embargo, this news filtering through, so that already created some jitters there. As the day progressed, things became much calmer. But do you think that, the global markets and everyone in that community feels soothed?
Well, there are a lot of unanswered questions. Many investors were not anticipating the 2 percentage point increase in VAT and asking whether the main aim of this was really to deliver a stronger primary fiscal surplus, to bring down South Africa's debt levels sooner. There's always a questioning what really lies behind this tax measure. Is there spending that is planned that analysts are perhaps not familiar with? As the detail of the budget filtered through around the time that it would normally have been released, I think for many market participants, there was a sense of confidence returning. The spending didn't seem wholly out of the ordinary, but there's going to be a big focus on what has been proposed, how the government of national unity deliberates around this, what kind of consensus is achieved, what could have been a very market positive outcome in our view. South Africa doing what it can with the revenue levers available to it to reassure market participants that it will reduce debt levels even sooner, perhaps in sight of regaining its investment grade rating even sooner. A lot of this was upended by the clear disagreement within government over what sort of policy should be enacted.
Which then, makes me ask the question, Razia, if, as you say, once the detail came out, there seemed to be that appeasement, there seemed to be that stability and reassurance re-emerging, it would sound then as if those who were in opposition to the budget in that incarnation were overreacting, potentially overreacting.
The difficulty with having been so public in opposition to a 2 percentage point increase in the VAT rate, and we can focus on the relative pros and cons of that, especially for South Africa, where it is at this stage of the economic cycle. The difficulty is once those disagreements are out in the open, it's very difficult for anyone to step down and it becomes even more difficult to reach agreement on that policy. If you've made a public pronouncement around your opposition to the proposed policy and you've managed to delay the budget reading for some weeks, it's very unlikely that there's going to be an outcome where all parties suddenly say, actually, giving it further consideration, this VAT increase may be the best course forward. And it's that uncertainty that markets are not going to like. So just before what would have been the budget announcement, we had the news release that there was no plan, no change in the plan in the amount that National Treasury intends to borrow in local markets every week. For investors, the big question will be, if this really very substantial revenue proposal is not going to be part of the budget, what changes? Is it possible to reduce spending without hurting growth? Is it going to result in the need for increased borrowing in local markets? There's a lot to digest and a lot of uncertainty for the time being.
Yeah, again, because as you're saying, what will the viable alternative be, especially in a high debt to GDP context that South Africa finds ourselves, which a lot of experts, and I'm wondering if that includes you as well, is an uncomfortable threshold for an emerging market economy like ours, that upper 75, 76% debt to GDP, where, you know, breaching those comfort levels, conventional comfort levels of around 60%. But I want to go to what you said about the sell-off that was happening in the immediate aftermath of this postponement, Razia. So two things, the Rand and bonds. Talk to us about what happened there. We saw the Rand go, I think it was opened at 1838, went up to 1858, then stabilizing by 1851. Not altogether unexpected because it can be a sensitive entity. But what we also saw was the sharp sell-off of government bonds. It's described to have been the sharpest sell-off since December last year, and what the options are for the recovery there. So talk to us about those two entities and what the expectations now are.
Certainly. So there are a few things going on. First of all, if the immediate concern around South Africa is uncertainty around the government arrangement, the governance arrangement that is currently in place, the Rand is going to be the first market to react. South Africa's currency market, as everyone knows, is very highly liquid, will react to almost any news, sometimes global events, sometimes local events, and it would be difficult to imagine bigger news than there being opposition around policy to this extent within the Government of National Unity. For bonds, it's a little bit more complicated. We know that investors have been focusing on whether South Africa might adopt a fiscal rule to reassure on its overall debt levels and its debt path over time. But there's also been a conversation in the background about potentially lowering the inflation target. Now, the advantage of the introduction of VAT at this time, a very opportune moment, given that inflation has been around the 3% level. And what we know from the past, what we know from the experience both in South Africa and in other countries, is when there is a VAT rate hike, you get temporarily more elevated inflation. It's largely a technical effect to reflect that tax hike, and it falls out of the inflation data within a year. But that might postpone South Africa's move towards adopting a lower inflation target. What the bond market would have been reacting to in the first instance is the currency volatility. In the second instance, if a major revenue-raising proposal is going to be rejected, what does it suggest about the borrowing requirement? And in the third instance, the expectations that might have been baked in, that South Africa would start to target more formally a much lower inflation rate over time, well, maybe that's on the back burner for now.
I want to go then to the currency volatility as relates to those government bonds. And for those who, and the simplest explanation that I understand it to be is people basically buy government's debt, and that comes at a fixed rate of interest. So why would currency volatility affect that fixed rate if their return on that investment is, my understanding, is guaranteed?
So in South Africa, there's always been a great sensitivity in the bond market to whatever the currency is doing. And the relationship is typically this. If the currency weakens, there's an expectation that that might lead to inflation. That's bad for bonds. So the bond market sells off. But I think there's a much more important conversation to be had. And this is around the proposal to raise the rate of VAT from 15% to 17%. Now, historically, we all know South Africa used to have a sales tax that was converted to VAT. Economists tend to think that VAT is a much better way of capturing some sort of transaction tax, if you like, because there are fewer loopholes, there's greater transparency. But up until that small increase in the rate of VAT in 2018, there had not been any change to what is at 14%, a very low level of VAT to be charged compared to global comparisons. Only recently we know that different countries looking to diversify their revenue base, take Saudi Arabia as an example. Saudi Arabia now has a VAT rate introduced during COVID that is set at exactly the same level as South Africa's. But in more developed economies, here in the UK, the VAT rate is 20%. In Italy, it's 22%. So there are instances where you see much higher rates of VAT. It's not a very distortionary tax. Some will make the argument that it's not the most progressive of taxes. But if you were to consider South Africa's tax regime as a whole, there's plenty in there that is quite progressive. And so there may have been room to increase the VAT rate. It's still one of the easiest ways that government could make a dramatic difference, a very dramatic difference to its debt levels. And why does this matter?
Yeah.
That will determine the future for many, many South Africans.
I can just hear the clamoring all across South Africa when you start to compare us to those countries, which some might say have a very different, have a very different economic and historic context to South Africa, and also that where we're sitting at right now, it's already, it seems punitive in the South African context. We've been speaking to some activists in Black Sash and so on this morning about these proposed increases. And when we talk about the VAT, I think the expectation was drawing in around 191 billion rand over the next 3 years. But I want to quickly put this to you, Razia, before we leave it there, is when you think about what the SARS Commissioner Edward Kieswetter had to say, which is where that little fissure set in yesterday between him and the finance minister. Kieswetter had said, give us the money rather to improve our institutional ability to collect massive amounts of tax. I think the expectation was between 300 and 800 billion against what we could get through this, and also saying that it hadn't been proven since 2018 in South Africa that this would be a high revenue opportunity when you raise VAT. What are your thoughts on that?
So 2 key points there, Iman. And whilst I appreciate the arguments in favour of boosting tax administration, it doesn't necessarily give you the additional revenue with any kind of certainty. It is a slow, long-term process of institutional improvement, and South Africa is under pressure, let's be honest, to show that improvement right now, to show that it can do something to correct that debt path that otherwise looks very frightening. The second point is in terms of the buy-in of South Africans for this higher rate of VAT. Certainly, we need to take the country's history into account. It would be silly not to. But one of the positives of post-apartheid South Africa was how successfully that tax base was built. A South Africa for all South Africans, people contributing to that tax base, contributing to the possibility of funding infrastructure, enabling growth, bringing about a different future. And I think in all of the political debate around this and the modest pain that might be involved at a time of low inflation with a higher VAT rate, a lot more needs to be said about how South Africa is going to establish the foundations for that transformative growth in the future. A VAT hike may be one possible way to go.
Razia Khan, thank you very much for your perspective and bringing in the global aspect of the decision that we made yesterday in Cape Town. Appreciate your time. That's the Chief Economist for Africa and the Middle East at Standard Chartered.